It's a bull. Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. I've got the Deerfield cam, which is a city a couple north of us. I think it's the second city north of us. Deerfield live underwater cam up today. Love this shot right here. Little cloudy and turbulent. However, oh, there goes a snook, man. That's a cool fish right there. Hard fish to catch, too. Nice size one as well. Cloudy and turbulent in the water today, it looks like, although the fish seem to not really notice it too much. And that's kind of what our environment is out there, politically and economically. It's turbulent and cloudy, but not many people seem to mind it. It's kind of a weird environment, isn't it? Well, let's move along to spot prices today. Kind of sideways from where they were yesterday, actually a bit down. Coin says a bull today. Let's see what happens. We just spend that coin for fun. Incidentally, I went back to the old coin with all its dents and all its rough edges and everything. I don't know. I like the old stuff. Seems to have a better sound to it versus this one. Here. And hold on, the old coin. I don't know. I went back to the old coin. The old coin said bull market today, so let's see what happens. I kind of think we're going to be seeing these levels, maybe even slightly lower, unfortunately, but it provides an opportunity to buy the dips, and we'll get into why lower prices are a good thing for all of us. I believe that too. Let's take a look and see what the numbers are. I'm going to do a quick refresh here, and there we go, refreshy, and 1759, ranges last night, 1754 to 1765. It kind of looks range bound after the monkey hammer it took from the Fed manipulation from a week and a half ago or so. Silver currently silver's up a little bit, 25.73, 25.94 being the high, and it's currently sitting at 25.92. You know, I gotta tell you, silver is just impressive, and there's a reason for silver being so impressive. There is absolutely a shortage of silver out there. Don't let anybody tell you otherwise. We discussed this, and we kind of touched on this on yesterday's show, but I've kind of come to the conclusion, in my personal opinion, that there's a lot less silver above ground out there than people think there is. I mean, we were having big issues getting silver prior to 2020. Filling large orders was getting more and more difficult. After 2020, after the closures, mines and mints closed down, it's even worse. It's even more exaggerated, even more exasperated. Is that right? No, exaggerated. Let's just use the word exaggerated than it ever has been as far as shortages out there. And I think that silver is a strategic metal, and it has a lot to do with inflation as well. Silver is used in solders. Silver is used in electronics. What did I say yesterday? 60 million ounces a year in cars or something like that, some crazy amount. Now we're going to go to the battery cars. Our cars are more electronic than they ever been. A commenter yesterday said that Tesla has, what, 1 or 2 ounces in every car? Seems like not a lot, but I would suspect it's even more than that, especially with the batteries and everything. But no less, that's a lot of cars, man, especially now that we're going electric. So a lot of this silver has not been mined, been tough to get the last couple of years. I think actually silver is waiting to make a major play here, and I really believe the powers to be, and I think governments for sure, governments, corporations, and banks and such. I believe really they're trying to keep the price down because silver goes into a lot of products. Again, this is part of inflation, and I don't think it's a good thing overall. Good thing for us silver buyers and people that are owning silver. That's a good thing. Platinum, gosh, look at that, 1061. We were at 1100 the other day. Platinum's kind of all over the place, making these big swings, 1074 to 1053. That's a $25 move overnight. Silver, not so much 25-cent moves, which is certainly not big for silver, for a metal that we saw during 2020 make $1 and $1.50 moves one way or another. Silver's been actually quite mature of late, kind of acting like its older sibling gold. Gold, on the other hand, it's just been getting monkey hammered down. But gold's a bellwether. Gold is a tell on the economy. So, you know, when the price of gold keeps continuing to go up and up and up, that's what we talked about Gresham's Law yesterday, is people will start trading in, and that's already happened, and it's been happening, and it's continuing to happen, is Gresham's Law. Bad money drives out, or good money drives out bad money. Or actually bad money drives out. I just forgot the whole saying, but forgot Gresham's Laws already. Hey, actually, that's what the internet's for. Let me just type this up here. Gresham's Law. God, I got it backwards. I guess I need some more coffee here. Gresham's Law. There we go. And what does Gresham's law say? Oh gosh, there we go. I'm going to just look at an image. I like image search. Gresham's law, and they have it nowhere. Are you really kidding me? They don't. I can't find it. Where is it in a nutshell? Good money and bad money. Good money will drive out bad money. I guess that's a proper way to phrase it. And that's kind of what we're seeing. That's what I believe central bankers are afraid of. They're afraid to see gold prices to continue to go up and up and up because it's an example. It's a perfect example of Gresham's law. People will hoard good money like gold and silver, and they'll get rid of bad money like dollars, fiat currencies, and people will prefer to hold the hard asset good money versus bad money. And of course, now that gold has been raised up to a Tier 1 asset, we'll talk about that in a little bit too. That was one of the biggest things about Basel III, is raising gold from a Tier 3 to a Tier 1 asset. No less, governments, not so much governments, but central banks, the people that run the fiat scheme, I should say, they can't afford to have the price of gold go up dramatically for a couple reasons. They're still accumulating it themselves. Chances are some central banks are still trying to get their gold back that they leased out in real form, physical form, not in a paper form. So they're probably still working on that, I would bet. And again, gold is I said again. Gold is a tell. Gold is, what do they call it, a bellwether? It's a tell. It's the canary in the coal mines. So when gold prices start going up dramatically, people are kind of looking and saying, well, that's not a good sign. That's a bad sign for the dollar, and more people will get into gold. And as I said, that's what we're seeing. We're seeing more and more people buying gold and silver, getting rid of fiat dollars and holding on to stronger forms of money like gold and silver. And platinum, which has been around for 5,000 years. So here's where the markets are today. Markets are open. Again, I kind of see sideways. Great buying opportunity. As I said, always buy these dips. We are in a bull market. Sometimes when you see these big dips like this and you see the monkey hammering, you wonder, how can you be in a bull market? But, when you get further and further away from a chart, when you're looking at a gold chart over the long term, the farther away from you get, you don't see the choppiness in the chart. You just see that line gradually going up and then a few points where it goes up at a 45-degree angle. But you don't see the choppiness. As you get closer and closer to the chart and the time frame gets smaller and smaller, little segments, you'll see the choppiness. So you have to have that choppiness in bull markets. And the fact is it's fiat, folks. That's what the world is built on. The world is built on paper and fiat. It's not built on tangible, real money. And I believe a lot of people are starting to awaken to that. And the central banks are acutely aware of this. They're not stupid. They may seem it sometimes, but they are not stupid. Far from it. Gold to silver ratio, oddly enough, is still about that same mark. I think I looked it up. It was around 68 to 1. If you take a look here at our chart, 1950 to 2000, I'll tighten that chart up here. It's 30 years. Let's go to a 30-year chart. From 1995, where is that? That's probably 1990. There we go, 1990 to date. 68 to 1 kind of puts us right in that center. So as far as the gold and silver ratio go, it seems to be kind of centered right here in this 30-year chart. So it's where it needs to be. But oddly enough, I had a commenter call me yesterday, and forgive me, sir, I forgot your name. I don't know if you even mentioned it, but you said you watched my show, and he did some math and some equations figuring out using a zero. Basically, gold and silver have gone down, both of them at the same time. It's just kind of too coincidental that they both get monkey hammered at the same time, and the price decreases are about the same as well. It's manipulation, folks. It's clearly manipulation by bigger entities than bankers and bullion banks. It's government manipulation, without a doubt. GATA.org has been talking about that for years. These people right here, and it's true. It just becomes more and more apparent. I was talking to a customer yesterday. Used to be where they really hid it very well. They hid this market manipulation. Now it's almost like in your face. They do it right in your face. Not only that, it's they look at you and go, well, yeah, what are you going to do about it? That's kind of like the attitude we've got going on right now with between governments and central bankers. Yeah, we know we do this. We know we know it's wrong. But what are you going to do about it? It's almost like it's in your face so much it's not even funny. It's so obvious, even to people that aren't in this industry. Let's take a look at ZH, not too much in gold and silver articles here. Let's see if there's any potential black swans for us gold and silver peeps. I guess there's always black swans. Another close down, for example, based on that Delta variant, could possibly put a big damper on the economy. UK is talking about maybe closing down again. So, we are a global market. We are a global economy. So, we're all in this together. So if Europe kind of goes down, that's not a good thing for U.S. However, as I said, these are reasons why you want to own gold, silver, and precious metals, hard assets like that. Mortgage apps crash. Oh, geez, where did I go? I went to a big blank screen. Oh, weather. Got stormy all weekend. Mortgage apps crashed to pre-COVID lows as home buyer confidence collapses. That's not a good sign either for the economy. That's not a good sign for the U.S. dollar. That's not a good sign for the Fed. I mean, they're battling all kinds of fronts. They're trying to keep the equities market up. They're trying to keep the stock, the stock market up, the bond market up. Trying to keep treasuries healthy, and they're trying to keep the mortgage industry healthy, and home buyers. They're trying to keep the home market, home prices up there. And, they're juggling a lot of balls here. And as I said, anyone that thinks the Fed is run by idiots, I may say morons and idiots occasionally and call them that name. But really, they're very, very intelligent, bright people. They're a couple chess moves ahead of most people. And that's what we got going on right now. They're juggling a lot of different balls. At some point, the juggling act's going to end. And oh man, everything comes crashing down. It's not a good sign. Inflation, the nail in the coffin of Biden's spending plans, absolutely. Oil jumps ahead of OPEC on speculation oil supply deal may be extended. Higher oil prices, higher prices of food, higher prices of this and that. I don't see how they say that this is simply transition or a transitory type deal where it's just going to be temporary. It's not going to be temporary. Inflation has not. It's been getting worse and worse and worse decade after decade. I mean, that's going to continue to happen, and it's going to be accelerated based on really boneheaded decisions by governments, in my opinion. So ADP employment gains slowed. There's no great news here, folks. There's nothing good that tells us that the economy is going to be better, that the fiat dollar is going to buy more products or more good. There's nothing here that says this and shows us that how central banks murder the markets. In fact, it's just all bad negative news, which is not good for the economy overall and not good for the dollar. But what is it good for? It's good for gold and silver buyers, because that's the place you want to be in these types of environments. When news starts looking really good and chipper and cheery, and the numbers start coming in real, positive, and you can see that they're not spinning it. Get rid of your gold. Until then, keep buying, folks. And let's move along to gata.org. Kind of a good article in here. As I said, if you're a new listener to this, to my videos here, this must be bookmarked on your page. Make sure you read the basics, confiscation, documentation. These guys know who the players are, how they play, how they manipulate the game, and who the big whales are. Definitely something you need to be reading. And they also do daily or weekly. I don't know if they're updating daily, but they do weekly articles. We're going to go over, and this is interesting. Mexico warns against cryptocurrency. Yesterday, in yesterday's video, we talked about the multimillionaire banker out in Mexico came out and said how he wants to buy cryptos. And today, the Mexican bank, the Mexico Central, remember what I told you? Central banks run the world. Even the banker got kind of put down by the central bank, said financial institutions aren't allowed to trade or offer services based on cryptocurrencies. So they basically told that millionaire, no, you're not going to buy cryptos with your bank, sir. Sorry about that. And as I said, bankers and governments run the deal here. They don't like competition, and they're certainly not going to let cryptocurrencies take over their business. They'll take over cryptocurrencies, but they're not going to let cryptocurrencies take over their business. Good article here, right here by Matthew Piepenburg, Gold and Basil's $3 trillion question. Let's go over that real quickly here. It's a long one. Actually, comics. I'm sorry, this is a different article right here, and here is Piepenburg's article. Gold and Basil $3 trillion question. What a great photo that is. Good movie, too, in my opinion. Gold and Basil's $1 trillion question. Matthew Piepenburg at Matterhorn Asset Management says June 28th has come and gone, which means that the much-anticipated Basel III macro-prudential regulation to make so-called safe banks safer has officially kicked in, and we know that. We talked about that on Monday. The short answer is gold will rise, but don't expect a straight line or a zero discomfort volatility. Or zero discomfort. Or yeah, we're going to have discomfort. We're going to have volatility. I don't see it as discomfort, though. I see it as an opportunity to buy the dips and just a temporary bump in the road. What Basel is, again, we know what Basel is. I'm not going to explain it. I mean, we have talked about it on this video over and over and over. I just kind of want to go over some key points. Also, if you get a chance, go to King World News, or I think it's actually in gata.org. Go to gata.org right here, and just read this article here. Click it like that, and then where's the article? The whole article is right here. Actually, it's on King World, so yeah, just go to King World. Go to King World, and you can read this article. It's called Gold, or just type this in, Gold and Basil $3 trillion question. Matthew Piepenburg did a really good article, or a really good job on this article. So he explains what Basel is. Is Basel III making the world safer for honest banking? I'll go over a few points on this. Seems like a good thing, right? Less margin, less Tier 3 risk, more stable assets, more reserves, safer banking practices. So Matthew's going over some of the positive points of what we would think would be the good part of the Basel III rules. Well, yes and no. Yes, the new regs will face greater liquidity requirements, thereby preventing them from Fossey saying they had gold when they in fact had no gold, and most of it was levered and more than one owner, so unallocated as well. But no, this will not lead to banks suddenly going on a forced buying spree. They're not going to go on a forced buying spree and skyrocketing the price moves to replace all their old Tier 3 paper gold with shiny new metal. Physical Tier 1 gold to meet their new reserve requirements. So, but he's saying that they're not going to go out and replace all this. I mean, that would be the simple thought, is that, oh, well, what are they going to replace all that paper with? Oh, they got to go out and buy gold. But that's not true, and he goes into it right here. Despite this, many banks have made hay online, claiming such an instant price rise would follow. But like we said before, banks may be greedy, levered, and dishonest, but they aren't stupid, unprotected, or suicidal. That's exactly, I agree 100%. That is, they've known these regs were coming and weren't in any hysterical panic to nervously collect their pennies and buy more Tier 1 gold. Not at all. What many of the pundit circle and YouTube universe people failed to remind their audiences was that well before Basel III's reserve requirement went live, those very same banks were already sitting on plenty of excess reserves thanks to prior bailouts, 2008. In the U.S., so they had plenty of money to cover these unallocated accounts. So in the U.S. banking sector, for example, the big boys were already well poised with over 1.6 trillion excess reserves cash. So, I mean, could they cover? Yeah, they didn't need the gold, actually. They don't need a Tier 1 asset like gold. They have more cash than they can possibly use. In fact, they loan it back. Yet all that is needed to meet Basel III is another $400 billion. In short, banks are not even close to worrying about a forced purchase of more gold to meet Basel III reserve percentage. Instead, they can simply allocate a portion of their excess reserves, cash reserves, complements of you, the taxpayer, and forced bank or bailout providers to meet the new regs. That's really interesting. You got to wrap your head around this, but they sit on tons of cash. They really didn't, it's not going to hurt them, put it that way. Rearranging, classifying the deck chairs on the Titanic. But what we do know from Basel III is that the unallocated paper gold on the bank's prior balance sheet needs to be reconsidered, reshuffled, and reclassified because it really wasn't gold. It was just a piece of paper that was based on the gold price backed by excess reserves of dollars. That is, they will set aside more money to buy physical gold to replace the paper gold, or will they simply reduce the size and scope of their old bullion business? take a wild guess. As noted as above, if you're expecting banks like Citigroup or Morgan to suddenly convert all their Tier 3 paper into physical 1 gold to make 85% quota, think again. Instead, they'll be dumping a lot of paper and paper gold rather than spark some immediate price surge in the physical markets. And the thing is that them dumping this paper gold is not going to have a really major effect on the gold market because they're really not selling gold. All they did was sold a piece of paper backed with cash reserves that was based on the gold price. So there's really no gold changing hands. A lot of people thought, well, maybe it'll go down because they've got to unload. They did nothing to unload there, folks. And as he says here, they're going to have to convert it over to not reduce it, but they're going to convert their stuff, and banks will be reducing, which adds, hold on. In other words, banks will be reducing the size and scope of the precious metals trade, which adds to the cost of lending to every player in the gold and silver space, from coin shops to mining companies. Trading will tighten and clearing costs will rise to match the wider bid-ask spreads. And that's what we're seeing too, wider bid-ask spreads, bid and ask spreads on gold products. And silver becomes less liquid, which could make institutional investors less interested in precious metals for no other reason. Liquidity will be harder and spreads will be wider. Well, I think that will be true when we're looking at a tepid market like we've been seeing, up and down, it's kind of sideways where it's at. But when in my opinion, when the markets really start to move upwards in gold and silver, these institutions, they will buy. They'll find a way to buy physical. In fact, some pension fund in Texas, well, I forget which pension fund it is, instead of buying unallocated gold or silver, they went and they built their own vault, or they have their own vault, and they have their own precious metals in their own vault. I think that you'll start to see some big entities start to stockpile precious metals when they see the writing on the wall. Suffice it to say that banks will always follow the path that is best for themselves, and more onerous for gold in general, and the rest of us little guys who isn't a bank. That's true. They're looking out for their interest. They don't care about us. In short, expect a lot less bullion, clearing service, and hence much higher trading costs. But what does that have to do with the trillion-dollar question, namely the future direction of gold and silver pricing? Good question. Basel III and the precious metal pricing. As traders say, buy the rumor, sell the news. For the last 3 months, Basel III rumors, gold saw a great deal of short covering and price upticks. But once the Basel III went through, the selling kicked on in Q, and gold saw expected falls. But the expected falls, again, I have, in my opinion, Basel III kicks in, all of a sudden the Fed comes in, the Fed jawbones the markets down. They sell a bunch of gold on thin traded markets in the middle of the evening when no one's actually trading. It's all coordinated. But as Mr. Pfeifenberg says, which should be a classic dip buying signals for far-sighted investors. What have we been saying? Buy the frickin' dips. And I believe he concurs with this. Near term, the fact that banks are reducing their bullion trades or rearranging unallocated Tier 3 and unallocated Tier 1 gold is not exactly a bullish signal for gold. But it's not a bearish one either, folks. Boy, this is a long article. I could go on and on and on. Let's take a look here and see if there's anything else I can zero in. You won't be given a margin. Some volatility and bullish inevitability. On the bullish side, however, a smaller market combined with more demand and higher transaction costs can send metals prices higher, not lower. Furthermore, the fact that Basel III reclassifies physical or allocated gold as a Tier 1 zero-risk assets means more banks, commercial and central, are likely to increase their vaulted positions of gold and silver. That's bullish. And that's what I was talking about this last week, is that the really biggest, most important news to come out of this Basel III rules, which are kind of, I guess it starts in Europe and then it's supposed to go in London in January, but they're really, the most important thing is that they raise gold from a Tier 3 asset to a Tier 1 asset. That's big news. I'm still trying to figure out exactly why did they do that. Why did central banks take gold, which they've always listed as a Tier 3 asset, and make it a Tier 1 asset? There's obviously big movements and big changes going on in the backgrounds if central banks made this happen. Well, let's see here if there's anything else. Putting it together, in sum, there's a wide arc of opinions and possibilities in near and long-term impact of Basel III on gold and silver pricing. As stated above, we can expect increased price volatility and even further declines in precious metals, but longer term, the arc of history, improved price discovery, and good old natural laws of supply and demand make gold an undeniable critical asset going forward. So keep buying, folks. Keep buying those dips. Look at it in the long term, not the short term, unless you're unless you're a day trader. And again, I don't know much about day trading precious metals, and I wouldn't recommend it. And I've been doing it my whole life. Here's another thing that I brought up as well. Even the central banks themselves can't deny this. It's why they've been purchasing more gold than treasuries. And I talked about this yesterday. What does Central Bank of Russia? What does the Central Bank of the United States, Federal Reserve? What does the central banks all over the world own? They have gold. They own gold. They have gold in their vaults, not currency, not treasuries, not bonds. They have gold in their vaults. That's what they protect themselves with. And they just made gold a Tier 1 asset. So there's something really deep going on here. I haven't quite figured it out, deeper than what most people are discussing or thinking about. Well, let's move along to yesterday's video. I appreciate everybody watching, and let me just kind of turn that off here. Yesterday's show was about smile and lie. If you notice, the smile and lie was me talking about what the Fed, what Powell basically did, is smiling and lying to us all, or maybe not always lying, but just omitting certain things, not talking about certain things. I'd like to thank all the people that watched yesterday's video. I can't really go over very much today. I've got a show that I'm going to, and I got to get ready for here. Venezuela is Boliviars, not pesos. Thanks for watching, NR. I appreciate that. Mentally Void just said, just traded bad money for 20 new Silver Eagles. Well, I'm glad you see traded the bad money. I'm not a big fan of Silver Eagles, but no less glad to see you trading your fiat for Silver Eagles, or for silver in general. And really, I hate to say it, I'd like to thank everybody here for watching. Tree Climber, you become my favorite broadcast. Thank you very much. I appreciate that. And baseball card collections. I can't help myself. I have to kind of look over just so you guys know that I do acknowledge everything. I've read all these comments too. I just don't have time to answer them all today. Best deals out there, folks, I can tell you, is anything that you're paying no more than don't pay more than $6 per ounce premium unless you have to. 6 1/4. That's the product that I have. Silver maples for starting at 6 1/4. Larger quantities I can do for a better price, but I can't recommend buying Eagles. I got plenty of them. They're more money. And what I do really recommend is if you're buying silver, sticking that between $4 and $5 an ounce premiums. Try not to pay much more than that. But 4 to 5, there's still product out there available between $4 and $5 an ounce premium per ounce on silver. Silver's getting tough to get, folks. It really is. As far as gold, same thing. No more than $60 to $80, or no more than $80, $85 over spot for gold. Bars are available out there, 60 to 80. All the coin stuff seems to be running $100 plus per ounce premiums. So meanwhile, I'm saying just stick with the bars. They're cheaper by at least $40 an ounce versus even Krugerrands. So that's you can buy a gold bar and an ounce of silver for the same price you could buy a Krugerrand, or maybe almost 2 ounces of silver for the same price you can buy a Krugerrand. I'd rather have the gold bar and 2 ounces of silver than a Krugerrand or a Maple Leaf. That's my opinion. Well, as I say, I am a local brick and mortar dealer here in South Florida. Been here since 1995 in this location. I've been doing this since 1977 as a second generation dealer. My father is in the business as well. I only deal locally. Unfortunately, I don't do any shipping. You can't buy on the phone or online from me. You have to deal face-to-face here in my store. But if you don't live in my area here in South Florida and you can't do business with me, as I always say, I recommend that you keep the money local. Find yourself a local coin and precious metal dealer that's been around for a while, and I'm sure that he can match or beat the prices of the online sellers. I advertise to beat JM Bullion, SD Bullion, APMEX Bullion. They're good companies, good big online companies, but I can beat their prices, and it keeps the money local here if I can sell to my local customers instead of them shipping their money out of state. May I also point out the importance of having a local precious metal dealer is at some point you're going to have to sell this stuff, and you're going to need to go physically somewhere because you do not want to mail your gold and silver in the mail back to these people. And there's a lot of reasons I believe that. Well, that's really about it. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Thanks for watching. Really appreciate it. Call me anytime at 954-493-8811 if you live in South Florida and you're going to come by and do business with us. Really appreciate you watching. Thanks. Have yourself a great day and talk soon.